What's going on, guys? Today's going to be a recap on the trades. My bigger wins were XOM and Microsoft. So we're going to first go over Microsoft because I already discussed the plan in the scan. This is a very, very simple trade, actually. And the reasoning as to why this is actually one of my favorites, just for simple reversion, not for a complete and total reversal. Just because we obviously don't have very clear signs of this being a continuation, more and less just a pop into the left behind gaps, and then obviously from there we could reevaluate. What this was, guys, was this was two relative equal lows of support here on the weekly chart that had a three lower low type of accumulation into it, right? You could see on the first wick how it was there, the second wick how it was there, and it successfully closed above, and then eventually the third wick how it was there on that weekly candle and had a hammerhead candle closure above. If you guys go into the hourly and you guys take a look at what's going on this hourly chart, you could kind of see how just through the volume profile, just through everything going on in this chart here, it doesn't seem like they really had enough fuel to push this thing any much lower, essentially. Most of the volume is coming in towards the lows, as you guys can see, and then it starts rolling over on much lower volume, and then we eventually make those new lows, and then those new lows can't obviously be given up on, right? And then we had a very nice strong rip into the Friday, right? So this was a very, very, very simple trade here for the reversion back to the upside. And essentially what I was looking for was this NWOG level right around here needing to be held. So we're looking at 386-ish, 385-ish being held, as well as these 4 days of resistance turning to potentially now a support. This is also tying in really nicely with that level as well. So we'll make that higher time frame level purple, and then we'll go into the smaller time frames and take a look at what was going on over here. So I initially tried this one right off the open just because I didn't really want to miss out on it, and I was like, all right, yeah, I'll buy into some April 17th expiration because I understand that if this fails, and if it actually wants to pull back and pull back a little bit lower into obviously where my level is really most important at, which is right around here, that would obviously be where I look for the break and base and continuation. Meaning like, you get your pop, you get your drop, and then what happens is it kind of just continuously moves higher up into the top of the gap. Like I said, all just a reversion trade. So now we could go over and take a look at the premium. I was looking at April 17th, and then I was also taking a look at day trade expiration once I had a little bit more confirmation. So I took April 17th right off of the open, and then I also did take some next week expiration as well. If you guys take a look at this premium chart here on the 400 call, this was a really nice depiction of like good measurable risk to reward right here. So whenever we're looking at the options chain, we could see this is the 400 call, 255 on the bid, 245 on the ask. Only a $10 spread on a $250 contract. That's pretty solid. And as you guys can see, there was a pretty decent reinvigoration of vol happening as we got our early morning pop. I added some right off of the early morning opening pop. If you guys go into smaller time frames here on this premium chart, you could see how they won't have it. Okay. Well, I got some at 250, around like 250, 260. Those popped up into about 310, and then obviously that was where the failure happened over the previous day high. And then it pulled back just a little bit, but I went red on my position, and then I added a little bit more at 230. Got popped back up into 290. So I had about a 240 average here on these, and I just stopped out. It was from 230 into 295-ish, call it 300. It was about a 30% win. It was about for me 25, like 23, and then I stopped out at break even once I had my once we started to see how this was failing over the previous day highs. And yeah, I think I was up a little bit more than that at the current time, but I can't really remember everything about that. But yeah, the level just really wasn't retested, and as you guys can see, price made ever so slightly, 386 into 385.60, only a 40-cent lower low. but the premiums kind of got reset midway throughout that day. These popped down into 192, so obviously I find a little bit of value there. And then I repurchased these once it obviously reclaimed the opening print, right? So right around here is whenever everything started to get a little bit more clear. And higher lows on top of like 386.70. You could also take your orb low, and you could think about also sizing more into your April 17th expiration. Essentially what I was looking for was maybe for this thing to just keep on bleeding beneath the level, and then I would just cut the April 17th for about a 20% loss, but that wasn't the case. So we go over to the April 17th, and we could see how obviously there's not a ton of open interest, there's not a ton of volume traded on a lot of these. I'm sorry, this one. There's not a ton of open interest, there's not a ton of volume. They're a little bit more spready, not anything too crazy though. You kind of want to look at like your higher open interest strikes that have some decent volume behind them for the day as well. And when we go into today's trading action going on over here, these were priced at about 615, 610, low 600s, right? And those popped up to about 690. So that wasn't anything too crazy of a gain for the time being. I had like a 620 average. They popped into 690. I was up like 12%. And then I was like, you know what? This hasn't truly dug into that retest just yet. The market looks like it could pull back just a little bit. And then they fell all the way down into 550. So for the time being, I was down like 10, 11%. I got my size a little bit heavier once we started to, like I said, reclaim those areas of price that made a little bit more sense, right? And then as you guys could see, everything started to climb all the way back up into 800s. So you could have had an opportunity here to get like a 600 average flat, and then take those all the way up to 800 on the April expiration, April 17th, which is monthlies here. And that's a 33% profit move here from swing low, swing high. Obviously, like I said, this is all just a reversion trade, simply back to the upside into the high to low 390s. It's not anything that's like I'm looking for a full on out reversal. Maybe eventually I will, but the daily chart doesn't just show that just quite yet. So you do have to know what you are trading. Same general concept over here with XOM. This was basically just a really nice pop off the open, really strong 15-minute buy signal. And then it had really nice momentum right through on the 940 follow through of the resistance, which I already was anticipating if you guys watched the scan on all of this being a path of least resistance, right? So I also had some April 17th expiration over here as well. We go over to the April 17th expiration on XOM, and we can see how that was also a decent little opportunity throughout today as well, right? So this is right off of the open, right around here, 940. These started to become priced around like 230, and then they had a nice little flag that flagged these down into 250, and then they eventually ran to 305. So opportunity here for about a 230 average, maybe if you're a little bit late, 250 average. It was a $250 contract that ran into 300. 20% win. It's not going to be anything crazy. You can decide on whether you want to keep that or scale that. And then if you want to go a little bit more on the risky route, which I did have a little bit of exposure here to the 115 calls on the 11-day to expiration. Basically how I was treating this one was looking at it as, okay, these are priced at about $95 to $102. And then I took, once I had a little bit more confirmation on everything getting follow through above that level, I took these at about like 110. And then I also added a little bit more into these down here as this gradually pulled its way a little bit lower. Added a couple more contracts on some of these wicks. I was just sitting on bid orders. So I had about a 115 average on this one. And then this one also ran into 160. So that was a really, really nice win there. 2 wins there on XOM. Basically the April 17th just to have a little bit more protection, but the 11-day to expirations ran 42%. So that was a really nice opportunity as well over there. Just scale into the strength because we don't have a very clear gap target in mind here for XOM. We don't have anything that's too crazy. What we more or less have is just back tests of these previous levels. And now we'll go over to QQQ. QQQ, it was kind of more of an insurance trade. We'll talk about this one here now real quick. So what this was this was 4-day to expiration puts that I was in, just as, like I said, a little insurance trade to see if the market rolled over a little bit to then prepare to collect liquidity within some of these gaps beneath us, like all the way down into here, right? But you do have to remember, a lot of people are trying to short the hole on days like this. The bottom end of the chart did have a sell climax. If you guys are looking at smaller time frames like the hourly, or if you guys are going over into like the SPY hourly, and there's a lot of targets in terms of places where this can move to in terms of reversion here back to the upside. So this was where the gap sweep was sitting, and I figured we could definitely go there. But if you guys go to QQQ and you take a look at that first hourly candle of the day, it was actually a little bit weaker, and it was a little bit weaker beneath the Wednesday high. So if you guys go to the Wednesday high, you could see how there was lower highs formulating beneath that Wednesday high. So I bought a little bit into the lower high here. I wasn't really planning on adding much size, and I was more or less just risking like this 480 spot once it was obviously filled beneath from. And then I kept adding into that 480 spot just around like 11:15 lower high, around the noon lower high, and then it obviously just had no true failure and kind of just based around this 478.45. A lot of the equity market was just pulling into the previous day lows into these bull gaps. Obviously, Amazon within that bull gap, and then a lot of these also had kind of like their sell climax type of look when you guys are taking a look at like your lower low accumulation taking place, followed by subsequent higher lows, and the whole entire sell side trend just kind of stalled out. So if you guys go into the premium chart over here, you guys could see around like these lower highs here on the put contracts. They were priced at about like $600, and I kept buying these from like 570 to 610. I think I had like a 590 average. They ran to 723 at the highs. So for the time being, I was up, I believe, if I remember right, it was about 20, what the hell? Probably like 22%, maybe like 24%. And then obviously everything started to roll over, and this just started to fail as a whole. And I've been, like I said, I've been bullish market, so this was a little bit on the riskier side of a trade, right? And I figured, all of these have very clear room for reversion here back to the upside into these gaps, especially if they want to mark it down into FOMC. They might want to collect some orders off of that gap, and then obviously that will facilitate price lower to then fill or at least sweep this gap down here, and then that would obviously result in a much, much, much better long side opportunity as we got a little bit lower into these ranges on the chart. So I don't know. I guess we'll see. But those were the 3 trades for the day. 2 stop outs on Microsoft. Right here off of the 618 is where I stopped out from a plus 20% to break even. What I did was I pulled current swing low, current swing high, bought in as a higher low off of the golden pocket, right around here at like 388, 387.50-ish, just that general range. Probably was a little bit more uncalled for, I'm not going to lie. And these rallied about 22%, and then I stopped out break even once we obviously couldn't get above the previous day high right here. So we swept that and then obviously pulled our way a little bit lower beneath the current low a day, failed to move beneath that current low a day, reclaimed it, and that's also, like I said, the last week's NWOG open. And then this reverted all the way back to the upside towards that low to mid 390s. So yeah, pretty easy day in terms of like execution. The only thing I really missed out on over here, guys, was NVIDIA fade off the open. And the reasoning as to why I missed out on this is I was obviously in my trade plan pulling fibs from the February OPEX high into the current low down here on March 11th. And I was basically looking for that 124 area as equilibrium to obviously show a sign. And I knew this was gapping up, right? And I knew it was gapping up and getting ever so slightly into that 124 spot. So I was looking at a day trade as well as like some April 17th expirations on NVIDIA potentially for a move to the downside. And as you guys could see, the April 17th expiration puts here, they did pretty damn well. I mean, they went from like 260 to about 370, and you had some opportunities for some pullbacks in the midst of all of this happening, right? Right around here was like a decent one of 122.50-ish. Here was your previous day high right around here right? So this was a really nice loss of the previous day high. Um, and obviously we have some gap fill targets in mind here for the downside. So off of this candle was kind of where I wanted to size in at 940. And then if we go over to the premium chart, as always, very important part of trading here, 940 was right around here, right? So this is whenever everything pulled back and then eventually got the breakthrough. And then as you guys can see, everything started to base contract-wise around 290, and then it had a straight shot all the way to 370 throughout the rest of the trading session. So this was a decent opportunity for like a 290-ish fill, and then obviously looking for that 290 fill to result in maybe a risk of like about 270 from the highs. Obviously, vol is going to be a little bit different, so call it like 250 to be very realistic there. But from 290 to 250, that's not a horrible loss, guys. I mean, you guys got to put into perspective here. Like, you're going to take a stab, and sometimes you're going to get paper cutted for a 13% loss. But at the end of the day, these ran from 290 all the way to 370. So it was a 13% loss and then about a 30% win. Not anything too crazy, like I said, but the market's not offering anything too crazy. So that was NVIDIA. That was about the only opportunity that I missed today. Everything else has been really, really nicely moving, and there's going to be a lot more trading down and after this FOMC, and this is an FOMC week, so everything has to be very careful, and you have to have a very careful approach with pretty solid risk management.